Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Another down test for the Australian dollar found support again at 62.8085. From the rejection was a little bit firmer on the close in New York. From there, the market is still expecting to find any down challenge to respect this region and therefore could see a potential bounce and eventually see a rebound back towards our 60-day moving average, somewhere around the 64-cent handle. Nevertheless, in light of the last 2 days' weakness, the rebound from today should put a slightly firmer foot and therefore see a short-term recovery with immediate resistance coming in somewhere around 63.5 to around 63.95. The euro did take the challenge to that top side level, and a key point which was seen around the region of 106.1015, but struggled to complete its task of clearing it, and therefore the market's closed underneath that downtrend channel line. In light of the pattern though, it's still bullish, and I still feel, and I'm not going to disband this view at the moment, that the market could break and head on towards the region of 106.7080 and even on towards 107 to 108 as a potential target. In view of the market's technical pattern, it's relatively bullish, and therefore I feel any pullback is likely to be shallow around the support region of 105.15 to 25. The dollar yen still coasting sideways underneath that key level of 150. The market seems a little bit apprehensive in taking that challenge towards that level, as previously there was rumour of the Bank of Japan intervened, but there was no confirmation to that. In light of the current whipsaw price action, any challenge towards that topside level around 150 may again see that price action happen and see a pullback. Now we do need to see a break of 148.75 to initiate a down move to 147.5, and the broad base holding around 144.5. Sterling closes to a long-legged doji. Still slightly indecisive in its direction after the last 3 days. The market has been somewhat negative. But still, I feel the market may respect this bottom side of the range, somewhere around the region of 120.30, and therefore could see any downward challenge rejected and eventually take out this top side around 122.7080. If we see a break there, that would give further scope up towards the target of 125 and reassess. No pulling back for gold as the market continues to surge higher and clearing the level of 1,958. It now puts 1,982 to maybe even see a move to the previous highs around the region of 1,990 to 2,000. In the sharpness that we've seen here, the market could easily snap back to the downside, so I'm a little bit cautious in viewing any bullish call at these highs. It's just a squeeze or market fear as the tension remains over in the Middle East. Moving on to oil, the market is relatively bullish as the market heads on towards that $90 target and posted an engulfing candle. Clearly indicates from the technicals as well that there's no pulling back and it's likely to be shallow. See how the market challenges that $90 level. If it breaks, then we could actually even see an extension on towards its recent highs around $94. Any pullback, as I mentioned, will be likely to be shallow. Well, that's a wrap. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.